Businesses also have filing requirements for New York. If a business is incorporated in New York State, or if it does business or participates in certain activities in New York, then that business is required to file a New York corporate return and pay any applicable franchise tax. The type of corporate return and required computations for taxes therein depends on the type of business that the corporation conducts. Foreign corporations, that is a business that's not incorporated in New York, is also required to file the appropriate New York State returns if the foreign corporation does business in New York, employs capital here, owns or leases property here, maintains an office in New York, derives receipts from activities in New York, or if the foreign corporation is a general or limited partner with a New York State business that meets those criteria. Certain businesses are also required to file sales tax returns for retail sales of certain tangible property and services. Use tax applies if the taxpayer buys tangible personal property and services outside of New York and uses such property or services inside New York. Sales and use taxes apply to tangible personal property, unless of course it's specifically exempt. It's applied for utilities, including gas, electricity, refrigeration and steam, telephone, for food and beverages sold by restaurants, taverns, and caterers, hotel occupancy, and selected services. To determine whether a client is required to file New York State sales and use tax, you can refer to the New York State Bulletin TBST 740, which is found on the department's website, and it's also on the link that I provided in the slide. It's important to note that when it comes to sales tax, they also make an assessment against the individual business owner who is named as a responsible person. So if your client is considering closing down a business for a sales tax audit, you have to inform them that whatever sales tax assessments are made against the business will be made against them as the responsible person. So the New York State uses a tool called an audit to determine if a taxpayer is compliant with its filing, reporting, and payment obligations. A taxpayer's case may be selected for audit based on any one of the reasons that I mentioned before that may have triggered the investigation. Once the case is selected for the audit, the department must comply with the procedures as set forth in the taxpayer's Bill of Rights. Unless, of course, it's a criminal case, then there is no real Bill of Rights. The taxpayer's Bill of Rights begin in Tax Law Section 3000, and it's excerpted on the link that I provided in the slides.